Hello friends, my name is Prince George and today I'm going to share a very interesting story with you all. The story of IFRS, the story of International Financial Reporting Standards. Every accountant and every student of finance and accounting will find this story very relevant and very useful because this will help you understand, irrespective of whether you are using IFRS or not, it will help you understand accounting standards in general. It will broaden your perspective about accounting standards in general. While this story is specifically about IFRS, all those events which led to the formation of International Accounting Standard Board, those global events, the board that formulates IFRS, but the principles would remain the same even in case of formation of boards, accounting standard boards, which formulates accounting standards for specific countries. The events will differ, but it would be similar kind of socio-political economic environment in which those accounting standard boards were also formulated. And as I said, it will help you widen your perspective about accounting standards. You need to understand that it is not always necessary that accounting standards, changes in accounting standards, amendments are triggered by some business requirement or economic reality. It could also be a political event or a social event. Or worst case, it could also be uh, the vested interest of some or an individual. If there is an entity which has, if it's an there is an individual who has a lot of influence in formulation of accounting standard, was he has influence in the body that formulates accounting standard, and the individual has made huge investments in some part of the world and would want that investment to be recorded, to be reported in a certain fashion. He would influence the boards to influence the way those his investment would be reported or or presented in the financial statement. So every accountant and every student needs to know the reality. Also, friends, since a lot of my audience is going to be students uh, who have just started studying finance and accounting, I would be touching upon some very basics about accounting standard, what accounting standards are, why they are needed, what are gaps. Similarly, I have also encountered that there is a lot of confusion among the professionals with respect to existence of IAS now. With the advent of IFRS, whether IAS still exists or not, there is confusion. So I will try to dispel those myths also. I being from India, and since video is also recorded in India, I would touch upon a little bit on the criteria for Ind AS, that is accounting standard for uh, accounting standard in India, and also little bit about the difference between um, adoption of accounting standard and convergence into accounting standard, specifically IFRS. So friends, I just spoke about this, right? These are various topics that I will tell us as a part of the story. To begin with the fundamental, yes, what what is an accounting standard and why is it needed? Friends, as we human beings need a language to communicate with each other, could be English, French, Hindi, Malayalam, Urdu, Chinese, Japanese, anything. But we need a common language to communicate. Otherwise, why what I would communicate will never be understood by the other person. Similarly, business organizations also need a common language, because they also, the users of financial statements, are the stakeholders of business organization, whom these business organizations need to communicate whether or not they're performing well or how they're performing. Similarly, what two business organizations are communicating to the users of financial statements, to the stakeholders, can never be understood unless and until they both speak the same language, unless and until they both use the same accounting standard. Accounting standard is the language of business. And the reason why you need accounting standard is, as I said, if there are two business organizations who are using their own accounting standards, their own ways of recognizing revenue, their own ways of recognizing cost, even if they are from the similar industry, you can never compare as to who is performing better. So that, in short, is the reason why we need accounting standard. I'll take very quickly a couple of examples, real life examples, to explain why they are needed. So this is the balance sheet of an Indian automobile company. If you see, you have the format of this balance sheet. It is called as balance sheet. And then uh, these are the various line items. You have assets, you have non-current assets, current assets, equity and liability, and then you have individual subheads within them. This is the balance sheet of Tata Motors, another automobile company in India. It also has exactly the same format. So if I have to compare who has better current assets, who have more current assets, I can straight away compare it here, right? Who has more equity, who has more liabilities, I can just compare them. They are so clearly comparable. But what about this? This is Mercedes-Benz. And hey, they use a different term for the statement itself. They don't call it balance sheet, they call it statement of financial position. This is what IFRS requires them to call. This is reported as per IFRS. So if I the terminology which is used for the title which is used for the statement itself is different. And then I go to the nuances. I see you have assets, you have intangible assets, property, plant, equipment, whereas in case of the the Indian entity, the balance sheet is entirely different, right? So you can't compare line to line here. It is not comparable. So if I, as an investor, want to invest in Mercedes or Tata Motors, I don't have a comparison. Where should I invest? Because both of them are speaking different languages. Similarly, if I say the profit and loss account, this is Tata Motors, this is another Indian company. Both are exactly the same. You have expenses, you have total income. Here also total income, just below that expenses. I can exactly compare which line item with the other line item. If there is a cost reduction in a certain line item, I can clearly compare Tata Motors with this company. But can I do this with Benz? Not at all. Again, the title of the statement is itself is different. They call it statement of income, right? So this, in short, is the reason why you need accounting standards. Everybody using the same accounting standard. Now, question: who prepares accounting standards? Well, every country has a board which is uh, which is obligated with formulation of accounting standards. In India, we have Institute of Chartered Accountants of India. FASB, this is the body which formulates accounting standard in US GAPs. You have IASB, International Accounting Standard Board, that formulates IFRS. Then you have Financial Reporting Council, which formulates accounting standards in UK. Then you have another body in Pakistan, our dear neighboring country, where this body formulates accounting standards for Pakistani companies. Now, what are gaps? I'm just going through the basics for the students, the new students in accounting and finance to understand. Gaps. Well, gaps stands for generally accepted accounting principles. It is an umbrella term used for all the accounting standards, all the principles and practices in accounting. So while all accounting standards are gaps, all gaps need not to be accounting standards. For example, for cryptocurrency, there is no accounting standard, but there are some practices in that industry, and those practices are called generally accepted accounting practices. There may not be accounting standard. So gaps are a wider term for all the standards, all the practices, all the principles in accounting. Now let's come to the real story. What are those events which led to the formulation of IFRS? Well, it all started in 1948 after the World War II. By then, the economies of the world were completely shattered. As you can see in this slide, whether it's Austria, France, or Japan, all of them were facing serious challenges with rise in price. Wholesale prices were 10,000% more in Japan. That was because Japan was devastated very, very badly. Similarly, the franc, the French currency, it was devalued 80%. So the state of economy around the world was very, very bad. But at the same time, something good also happened. There was an emergence of a new world order. There was an emergence of new powers in the world. Because of all that, now the power centers around the world were established, and because of that, now there was peace in the world. It is said that to have peace, you should have war, and that is what has happened. You had America and a couple of European countries and Russia on one side, USSR on one side, who all emerged as powers during those days. With the emergence of these powers, now some very important development happened in the world. There was a baby boom in US and in many European countries. Baby boom basically means after the soldiers came back after many years of in the battlefield, the second year after they came back, there was babies all around. Right? Most of them were married, so now they had babies. And then wartime technology did not really go obsolete because now they were used for civilian purposes. There was infrastructure development all around. A lot of huge economic activity was happening everywhere in the world, especially in US and those countries which fought battles. And as I said, because there was a new world order established, we knew that who are the power centers in the world. There was optimism. Now there was no scope for war anymore. People felt that powers are established. Countries know who is powerful and who is not. So there was no need to war. Now there was a time to start redeveloping the world. And that's why massive economic activities started happening. And as a result, global giants like GE, Ford, Sony, Toyota, Volkswagen, Siemens, Philips, Nestle, IBM, Unilever, these were all formed. These were all babies of post Second World War, in fact, post First World War times. But post Second World War, they became really, really giant because the focus was on development. As a part of this, now I am in this slide, I have only presented FDI in US, but there was foreign direct investment across the world in all the countries from other countries. So this slide shows how post the Second World War, the FDI in US alone grew to such an extent. In 1950, it was just 3,000 million. In 20 years, it becomes 4 times. By 1979, it was 54,000 million. So all this is suggesting the extent of development that has activities which was happening till 1973. Now, there is so much of investment from one country to other, from a rich country to poor, poor to rich, across. There was a web of investments. Now, this called for a global accounting standard. As I said, the objective of accounting standard is to make two organizations comparable, two financial statements comparable. So just imagine somebody from US is investing in Japan, and his investment in Japan is being reported in the entity where the individual has invested as per accounting standards in Japan, which is showing that he is not making profits. Whereas as per the accounting standard of his own country, he's making a lot of profit. So there is a huge gap. A need was felt that both should speak the same language. There should be one common accounting standard. For the first time in around 1965-70, a need for a global accounting standard was felt. And that is when a very powerful body during those days, IFAC, International Federation of Accountants Council, which was a global organization representing the accounting profession, decided to form an international body to set up global accounting standard. 1973, International Accounting Standard Committee was formed. So for the first time in the world, a global body was formed, which was tasked with formulation of accounting standards, which every other country in the world will try to imbibe. Now, the problem with this body was it was formed by initiative of professional accounting body of these 7, 8 countries: Austria, Canada, France, Germany, Japan, Mexico, Netherlands, United Kingdom, Ireland, United States of America. No, they were not representing the whole world. You have Russia missing, India missing, China missing, Poland missing, just giving example, Finland missing, Austria missing, right? Korea missing, Russia missing. So this bunch of countries, because they were the power centers, and they were kind of allies during those time. Post Second World War, they were the allies. There was Russia on one side, then you had these bunch of countries on one side. They were allies, so they decided to form this body, and also perhaps most of the inter-country investments were done between them. The goal of this body was to formulate a global accounting standard. This global accounting standard was called as IAS, International Accounting Standard. Now come 1990s. So we saw why International Accounting Standard Committee, the body that formulates international accounting standard, was formed. The scenarios which led to the development. Now come after 20 years, 1990s, the world has changed now. You had new age technologies and businesses. You had mobile phones. You had companies like Google, companies like Infosys. In India, you had companies like Bharat Matrimony. Then you had new products like a laptop. Then you had internet. Earlier there was no internet. You had a new product like a mobile, right? So now the world has changed now. If you see in this slide, it was services which was driving the business and not manufacturing. Google is a service company. Internet is service. Infosys is an IT company. The only two products that we see here, manufacturing company that we see, is one related to the laptops and one is mobile phones. The erstwhile accounting standard, the international accounting standard, were formulated considering the uh, uh, considering manufacturing as the core business. Now it's changed. Now you have services and complex services now. So the world is gradually now changing. Accountants around the world have started feeling the need for a different accounting standard to deal with these situations. There was no limitation of border now. Somebody sitting in India selling in US, how do you account for all this? You need different kind of approach to deal with the situation. And more importantly, 1990s, there was an emergence of a new global order. Soviet Union, USSR was no more, was fragmented. The Cold War almost came to an end. European Union was formed. Euro was invented. Currency, one unified currency. The world had never seen before a unified currency. When you have a unified currency for such a large continent, it obviously also calls for a unified accounting system, accounting standard. IFRS, a very important reason for IFRS was Europe. Economic liberalization in India. Germany was reunited. Globalization was like, and then you had superpowers. You had power centers like India and Pakistan emerging, nuclear powers like India and Pakistan emerging in Southeast Asia. So this was a new global order wherein power was not limited with those 8, 9 countries who were initially instrumental in the formation of International Accounting Standard Committee. Now the investments were also not limited to those few countries. Every country was by now investing in each other, and every country had almost equal stake in the other country. So naturally, every other country who was not part of the initial 6, 7, 8 countries that formed IASC would now call for their say in the board, in the formation of accounting standard, in the formulation of accounting standard. This chart shows in 2000, this was the state of FDI, United States received the maximum, Germany, United Kingdom. On the ninth position, it was China. So by 2000, China had started growing. By 2020, 2021, it was against United States, but the second number was now China. So the thought process for IFRS had already started in late 1990s. By 2020, the need was established. The foresight, the foresight was established by 2020. And you see, by in the number 8, it was India. It was not existing 20 years ago. So by end of 1990s, every country called for an overhauling of IASC, International Accounting Standard Committee. So friends, it's not always about accounting principles, how robust the accounting principles are, as is envisaged in the accounting standards. It is also about who is formulating those accounting standards. So overhauling of IASC was required, as I said, less because of the business need, but more because of the change in the world order. Now, every country wants their representatives sitting in the board, International Accounting Standard Board, so that representative can monitor whether the accounting standards which are formulated are in the interests of of his or her own country. So a different approach was called for. Earlier, there was lack of independence. International Accounting Standard Committee was completely controlled by the global body of accountants. It did not have independence. And that's the reason if it doesn't have independence, then it will not be accepted. Nobody was willing to accept IAS. IAS existed for 2 decades, but no country accepted it. They did not accept because they did not trust the body which was formulating International Accounting Standard. And there was lack of transparency. Nobody knew why there was a change made in an accounting standard, International Accounting Standard. So as a part of that overhauling, a new body was formed, which is called International Accounting Standard Board, which has representations from all the major countries of the world. It was much more inclusive and consultative. Accounting standards were not formed in isolation. There were committees, there were subcommittees, there were interpretation committees who were involved in the formulation of accounting standard. And post formulation of accounting standard, there were bodies who would interact with the industry, take their inputs. So this was far more inclusive and consultative board formulating accounting standard. And yes, it was independent. It was independent and a separate entity from IAFC. IAFC is the body of accountants. There was a new monitoring board which was introduced under IASB to oversee IASB. Sorry, not under IASB, to oversee IASB. The new accounting standards which were formulated by IASB were called as International Financial Reporting Standards. Now, as I said in the beginning, there has always been a confusion whether International Accounting Standard still exists after the advent of International Accounting Standard reporting standards. The answer to that is yes. Some of them still exist and some are replaced by new IFRS. So here is a list of all the IFRS that we have. We have 18 IFRS. Then the list of IAS that we had, you can see it's mentioned some of them are superseded by IFRS, some are replaced, some are withdrawn. So it's a laundry list. You can actually take this list from the website, the link which is given below. The important message here is to answer the question whether international accounting standards are still relevant. Yes, they are still relevant to the extent they are not replaced by a new IFRS. And that list is readily available in the website. Now, the question is, what do you mean by convergence and adoption? Well, convergence involves the process of making two sets of accounting standard more similar by narrowing the difference between them. It aims to bring national accounting standards closer to international accounting standards without necessarily fully adopting the international accounting standard. So an international account, an IFRS, which is formulated by an international accounting standard board, may or may not be fully relevant or adoptable to the country, to individual countries. The countries may have their own social, political, and economic realities. So they may want a little bit of changes, amendments in the original IFRS, and then implement, make it mandatory for their companies. That is called convergence, wherein you are making some amendments and then implementing it in the country. What is adoption? Adoption is just taking and adopting it. For example, countries like, I think Bangladesh has just adopted it, IFRS, without any changes. India has not adopted. India has converged into IFRS. Where does the members, India and rest of the world stand? India, the Ministry of Corporate Affairs in India introduced Indian accounting standard, INDAS, for certain companies, starting with listed companies and certain other specific entities. So in case of India, INDAS is largely converged with IFRS. That means with little bit of changes, they have converged with IFRS, whereas there are many countries who have just adopted IFRS as it is. Many parts of Europe, then in Asia, Africa, Middle East. As I said in the beginning, I'll be very briefly touching upon this. INDAS is not mandatory for all the companies in India. It is mandatory only for companies listed on stock exchange in India and their subsidiaries, joint venture, and associates. Similarly, companies which are not listed but which has a net worth of 500 crore or more, holding companies, subsidiary, joint venture, associate companies, or companies that are required to follow INDAS, also are required to follow INDAS. Why do we need to study IFRS? Well, the answer is very simple. As I said, the world is far more globalized than it used to be earlier. And there is a web of investment, intra-country, intra-continent investments across the world. And increasingly, countries have no other option but to either converge or adopt IFRS. Otherwise, they will start missing the bus. It's important for example, it is important for India it has already converged, but it was important for them to converge because there is indeed a lot of investment FDI flowing into India, and the investors would demand those numbers to be reported in a format, in a way that they also understand that the world recognizes. So it's important that from an economic perspective, it is very important. From a business perspective, it is important that you being accountant, you study the principles laid down in IFRS. And yes, from an employability perspective, of course, it's important if you want to join an MNC, multinational company, they would seek understanding of IFRS from you. There are usually parallel reporting in any Indian company, one which goes to the statutory bodies in India, and the other reporting goes to, if it's a foreign company, to the management, which is based out of India. And reporting to them has to be in IFRS. So, friends, that's it. I hope you all enjoyed this story and this short presentation. Thank you so much. I would appreciate if you put down your comments on the comment section, and please try to reshare, repost this video. Thank you so much.